funds are shifting into the seasonal rebalancing phase. After Nvidia's record earnings, some of the big money is rotating out of tech, with managers locking in profits rather than chasing another leg higher. And with September here, historically one of the weakest months for stocks, risks are piling up. Markets are now pricing in an 85% chance of a Fed rate cut next month. But here's the tension. Those cuts would arrive in a still hot economy. Q2 GDP was revised up to 3.3%, the strongest in nearly 2 years, while inflation remains sticky. That combination is raising fresh doubts about the Fed's credibility. Policy headwinds are also mounting. On Friday, an appeals court ruled that part of executive branch's sweeping tariff program, once projected to raise over $500 billion a year, was illegal. If the ruling holds, it will take an act of Congress to revive them. At the same time, government funding runs out September 30th. Executive branch is testing executive power with a so-called pocket rescission, canceling $5 billion in foreign aid without congressional approval. Some lawmakers are calling it unconstitutional, raising the risk of a showdown if no deal is struck. Safe haven flows are building. Gold and silver surged Friday as traders looked for protection against Fed doubts, fiscal uncertainty, and stubborn inflation. Meanwhile, the latest producer price index report confirmed price pressures aren't easing as quickly as markets hope. Markets ended the week little changed after 2 sharp down days. Book ended a midweek rally. The S&P 500 slipped 0.1%, but not before notching its 19th and 20th record closes of the year. The Dow also eased 0.2%, while the Nasdaq fell 0.2%. Semiconductors led the pullback after Nvidia issued a cautious revenue outlook, cooling some of the momentum around tech. In short, the growth story is still anchored by AI, but September brings a new set of headwinds. September has built its reputation as Wall Street's toughest month for a reason. Over nearly a century of data, the S&P 500 has posted negative returns 56% of the time, averaging a negative 1.2% decline. Tax payments, treasury issuance, and institutional rebalancing all pull liquidity from the system just as traders cut risk ahead of earnings season. This year, those pressures collide with record hedge fund crowding in big tech, making the market especially fragile. Historically, leaning defensive or hedging volatility has been the smarter play until October resets the tone. This week, the spotlight is on the August jobs report, the last labor release before the Fed's September meeting. Consensus expects just 78,000 payrolls added, unemployment edging up to 4.3%, a near 4-year high, and wage growth steady at 0.3%. The ADP report, JOLTS, and Challenger layoffs will offer additional context. Want weekly recaps like this and a heads up on what could move markets next? Click the link below and subscribe to the Level Fields newsletter. It's fast, free, and built for investors who don't want to miss a beat. Follow and subscribe for more. Level Fields, Elite Investing, Effortless AI.